Hello again, this is Alex with MasterChartsTrading.com, and this is market recap for Friday, November 17th, 2017. So stocks pushed to fresh highs. This is a risk-on posture. We'll look at some of the sector funds like XLP, transportation, utilities, biotech, solar stocks, and I'll show my trades. I have two positions, well, one position, and I added to it. We'll look at bearish patterns in a bullish instrument, which usually don't work out. I think junk bonds have bottomed, and we'll look at TLT and compare it versus SPY as far as volatility goes. We'll also look at some of the Forex universe, look at dollar and Mexican peso and euro and yen. Oil bounced to first support, energy is still lagging, and natural gas I think is leaning bullish. All right, let's look at S&P 500 first. This is our proxy for the market, S&P 500 on a daily time frame. So last week we hit fresh all-time highs. This week we kind of pulled back, and then on Thursday there was a surge here. It was a little gap here and continuation higher. So far, no new highs were made, but once again, this is a bullish chart, so I would expect new highs sometime soon. I don't see any issues with, for example, advanced decline lines. I think we'll eventually push higher from here. On the weekly time frame, you can see basically for the past month or so, S&P like more or less went nowhere on a closing basis, just kind of traded sideways. We have a hollow spinning top candlestick on the weekly time frame. Again, I don't see too many issues with this chart. I think this is a bullish chart, so I would be looking only to buy, only buying opportunities. Here's QQQ on the daily time frame, and these are indeed again fresh all-time highs. Clearly bullish chart. Advanced decline lines notice hitting also fresh highs. So I don't see any reversal patterns on this one. Here's QQQ on the weekly time frame. We have 1, 2, 3, 4, 5, 6, 7, 8 hollow. Well, this one is almost hollow candlesticks on the weekly time frame in a row. So notice this move from November 2016 lows. It just went straight higher, straight to the top. So again, I would not be looking for reversals. I would not be predicting bear market. One day the bear market will come in, but we will definitely see it. We will see a rollover, and I don't see a rollover right now. Here's IWM on a daily time frame, and I believe I pointed out the selling as a setup to buy, and looks like we're surging because we have hammer-like candlestick, hollow hammer-like candlestick, and then follow through on Thursday and Friday. I mean, we still could go back and forth, but I think the bigger direction is up. Here's XLP, and I was somewhat worried about this one because notice it kind of sold off relatively hard here. In fact, let me show you XLP with my elite indicators, and you can get this elite indicators. You just sign up at MasterChartsTrading.com, and you will get this indicators. I need to add you in manually. So here's XLP, and notice that there was a lot of selling, and if we continued lower I would be quite worried, but notice where it found support. It found support exactly at this teal line. So these indicators provide extremely useful support resistance lines. Several pockets of, well, not really weakness, but this is a chart of interest, I would say. So here's the utilities, and notice big, this is a weekly time frame. Notice that this is a bullish chart, obviously, there's a fresh highs, but notice where it kind of resistance came in exactly at R2 level, resistance 2 level from pivot point. So again, pivot point provides also useful support resistance lines, but you know, not always. Like, so I personally prefer to use my indicators. So here's, for example, XLU, and with elite indicators on them, and notice that, for example, here's XLU bottoming again exactly at the blue line. So, and you know, continuously surging above the green line. So I think that utilities are clearly in the bull market, but maybe a little bit pause and then fresh highs. Here's a little bit of a weakness in the transportation sector, not a very large weakness, but a little bit. Here's transportation IYT on the weekly time frame. So we had quite a bit of selling here for 1, 2, 3, 4 weeks. I think we're done selling, honestly. Let's look at it on the elite indicators again. Blue line provides decent support. We're a little bit below the blue line right now, but I think because of notice how we're moving higher here, I think the good support would be around 166, maybe a little bit lower, like 164, but I think we may have already bottomed for transportation. I read some commentators are saying that biotech has rolled over into a bear market. I don't think so. I think this is a bullish chart still. I mean, this fresh highs here. Not sure. Let me take a look if they're all-time highs or are they. Well, they're 52-week highs, but still, that's pretty good. So again, I would be buying biotech if anything. Here's XHB. I wanted to show an interesting pattern, I thought. Here's a daily time frame XHB, and here in beginning of November there was some announcement about something to do with tax plan that's coming out, and they're saying that possibly they're going to eliminate interest rate deduction for the mortgages. That be that as it may, it did not really work out as far as the pattern, because notice that this is a clear rising wedge, and if you look up definition of a rising wedge, it's a bearish continuation pattern, because we have a plunge and now a rising wedge. So we need to see a rising wedge break for it the pattern to complete. We can say that this was a rising wedge break, this little thing. Notice it didn't really go anywhere, and we made fresh highs. So my point is rising wedge, well, bearish continuation patterns in a bullish security such as XHB currently don't normally work out. We should be looking instead for buying opportunities for bullish instruments. Here is a position that I have, and this is what, if you sign up at MasterChartsTrading.com, you will get something similar. You will get alerts, and I calculate the position for you, so you don't have to calculate the position, risking $100. If you don't understand this, send me an email, I can explain it. And I also, of course, teach this at MasterCharts Trading, so all subscribers get this type of charts. So my position I initially opened back in March. This one obviously went quite well, and I added, and I don't even normally do that, but this time I thought, this looks just great. So I decided to add some to my position that I have open, and it was a good thing because notice it went. We got 3 targets over just less than 2 months. So this looks like a very nice trade, and obviously subscribers are doing the same thing, getting the same thing. So overall, stock market is bullish. I again don't see any reversal patterns just yet, so I would be looking to go long this chart for S&P and for most stock funds, not all, to go long and not to short them. Okay, let's move on to the bond universe. Here's junk bonds on a daily time frame. All-time highs back in October, significant selling with a couple of gaps and one relatively big gap. A little more selling, but then a beautiful hammer candlestick with a follow-through next day with a big gap. Look at this gap on Thursday and move higher. I mean, on Thursday's candlestick is, if it was hollow, I would be absolutely ecstatic, but or rather, if it was, if the close was next to the highs, I would be very happy, but currently there is some resistance up here. You could potentially look at the lit indicator, see if there is any resistance up there. So here is trading viewer interface. Junk bonds have, yeah, so looks like there is resistance, a little bit of resistance. I don't know how much. Zoom in a little bit. Notice that there is a little bit of resistance at the blue line right now, but I think that this is a bullish chart for junk bonds, and I again would not short it anytime soon. Here's the weekly for junk bonds. Yeah, big move from November lows, but I don't see reversal yet. Again, we need to see a lot of selling, support breaks, a lot of selling and support breaks. That's just not happening yet for a reversal to materialize. Like here, for example, we had a selling and then finally a support break right there below the 2014 lows. Anyway, so yeah, for now I think junk bonds are in the bull market, and the reason why junk bonds are so important is because they correlate strongly to the S&P 500. Notice that over the few last days, weeks actually, there was a negative correlation between the two. But on the longer term, notice that the junk bonds correlate pretty strongly with the stock market. TLT is a kind of like the opposite of the spectrum. It's ultra conservative, safe haven kind of fund. This one is difficult, honestly, because the pattern is not very clear. And maybe this is a W, and well, we can see a breakout higher, but as of late, there was a lot of chopping around with big gaps, like for example, just last week. So I was not exactly sure what's happening. So I personally don't have any positions in TLT. And maybe I'll stay out of this market for a little while. I'm not sure where this is going. I mean, it could be that we're gonna see a breakout to fresh 2017 highs. But the opposite is also true. What if we break below 122? So it's kind of a difficult chart right now. Okay, let's move on to the Forex universe. Here is a US dollar on a daily time frame. And if you listen to my previous videos, I said that currently I think that the dollar is on a downtrend, and I would be, if I was trading it, and I don't trade currencies currently, if I was trading it, I would be looking to short dollar. And I said that the resistance is up here at around 95.50 because of the support break. So maybe this is already resistance reaffirming itself, and we haven't even gotten to that part. So we could take a look at the same chart using the elite indicators. Here is DXY, US dollar on the daily time frame. So the resistance is at 95.80, but maybe we're already rolling over. It's also possible. The reason why I think euro or that the dollar is in a downtrend is because we've hit multi-year lows here. It's a choppy chart. I mean, look at this: 52-week lows, 52-week highs, 52-week lows. Now it just sure as heck looks primed to move lower from here. Here's euro on the weekly time frame, a big rally in euro, bottom in action back in 2016, beginning of 2017, and 52-week highs was a breakout above previous highs, and this was very strong resistance, I think. Now we have a throwback and a surge, so it looks like we're surging. This also looks primed to go to fresh 52-week highs here. US dollar versus Japanese yen on a daily time frame. So in other words, this one is reversed. In other words, Japanese yen is currently, well, over the past week at least, has been winning this battle, because you can see that on the weekly time frame, you can see that past 2 weeks, US dollar versus Japanese yen was moving lower. In other words, the Japanese yen is winning this battle. So here it is in the same US dollar versus Japanese yen on the elite indicators. This one is more difficult chart because I feel that maybe there is somewhat of a stronger upside bias, but notice this, there's not that much of a trend. It's more of a chop, kind of between 107 and 114. But if I was trading it, it would be kind of weird for me to think the dollar is in a downtrend, but the Japanese yen is not contributing to this downtrend. So I think we are seeing resistance here. Notice that at around 114.4, maybe there is resistance up here. Here's US dollar versus Mexican peso, and the same thing. I think this is a opportunity maybe to buy Mexican peso, or in this case to short this security. So here's US dollar versus Mexican peso. Again, I don't trade this, but I think it's a interesting setup. Notice that we have resistance at the teal line here. So overall, I think the dollar is in a downtrend currently, and I would be shorting it if I was trading it. Right, let's look at gold. After we look at the dollar, let's look at gold. Gold and dollar are negatively correlated, which makes perfect sense because gold is traded in dollars. Here's gold on a daily time frame. I pretty much repeatedly said that gold is an uptrend and I would be going long. So basically the reason why I think gold is in an uptrend is pretty simple. These are 52-week highs. Then we have a throwback, attempted rally, another pullback, and it looks like we're surging finally. This was a very big surge this Friday actually, and the dollar barely moved, so gold is sensing something. I don't know what's going on. Here's GLD on a daily time frame, you know, same thing basically, same picture. Looks like we're moving higher, and again, I would be buying it. I actually personally have a position in GLD on the long side. Here's gold on a weekly time frame, nice hollow candlestick here. Again, I think this is a bullish chart, and I think we could see a fresh breakout to 52-week highs, especially if dollar decides to roll over. Nothing here. Here's GDX, gold miners ETF. A lot more choppy, obviously, than gold itself. Sometimes it's kind of difficult to see where this is going. So as of late, I haven't been trading too much GDX. But I think this is a bullish chart also. And some of the stocks I recently looked at, like for example, here's Royal Gold, and this is also a bullish chart. Notice that we're moving higher, and this is fresh highs. So I would be going long GDX. I would not be shorting this chart. On the weekly time frame, not as strong of a gain as gold itself. I think there are some pockets of weakness within GDX. Certain stocks, like for example, I think it's for example, here's Giga Goldfield. Well, not Goldfields, but Hecla Mining. Yeah, look at this move lower. So there are some pockets of weakness within the gold market. Here's Barrick Gold, but there are some decent looking stocks within the index. For example, Newman Mining, and I just showed Royal Gold. So I think overall the index should push higher from here. All right, let's move on to the hard commodities. Here's West Texas Intermediate light crude oil on a daily time frame. I have described my short in oil. It was a successful trade in a sense of I didn't lose any money. I made like 0.25%, but I think sometimes it's best to at least get out at break even. I wanted to reiterate that I shorted oil on this candle. It went in my favor. I was very happy, and then it gapped against me right there, October 10th, and I closed my position because I thought it was not a good sign. It was a good thing because notice this big rally here to 52-week highs actually, and slight pullback, and now a surge. So I wanted to show you the same chart. Well, let me do the actual futures chart of oil, and notice that we have made fresh highs and then pulled back. Where did we pull back? Exactly to this green line on the indicator. I actually tweeted this chart as well, and yeah, if you bought the green line, you already have a profit, which is nice. West Texas Intermediate on a weekly time frame up until like here. I thought that we're still gonna roll over into a bear market, but now maybe we broke out and maybe we'll continue higher. I have no idea where this is going. I'm leaning more bullish currently, but then again, I'm already hearing that oil producers are bringing more rigs online, and more rigs means that there is going to be more oil. More oil usually means lower prices. So we'll see where this goes. Energy, on the other hand, XLE, notice it had a drop here of over 3% this week versus oil, which barely moved anywhere. So I wonder if energy stocks already know something. So again, I wanted to show you XLE on the elite indicator and the daily time frame here. So XLE for me needs to break out above 72.21, maybe even, yeah, maybe 73 or so, and break out and close above that line. For now, I don't feel like there is a breakout yet. Eventually, I'm sure it will come. And here's what it would look like, this breakout. So for example, here's Nike, and I actually have this stock. I just entered it myself, November 15th, and notice see how it closed above this blue line right there. And to me, this is already a bull market basically, and next several days looks like we're gapping higher. You can get these indicators at MasterChartsTrading.com, and you can ask me how to use them, and I explain everything, obviously. So for now, XLE is kind of in no man's land. I don't know where this is going, but you know, once I see a breakout for XLE above this blue line, then I'll be like, oh, okay, yeah, we're going go long. For now, it's like I'm just basically avoiding it. Here's natural gas, another chop fast. So if you're a new trader, I would highly recommend you not trade natural gas. So it just hurts my eyes to look at this chart. And so let's look at the weekly. The weekly is not much helpful either. It's basically a sideways consolidation. Possibly we got a breakout to go higher. So again, we can look at it on the elite indicator. Here's natural gas CFD, contract for difference. Maybe this is a break higher, or maybe this was already a break lower. So I will just stay out of this for now. Okay, so I briefly wanted to mention how to find me on the internet. Go to MasterChartsTrading.com. There is a trade alert services. If you already signed up, then you should hit the renewal button. But you know, if you sign up right now, I'm actually given the indicators that you just saw. This MasterCharts Trading long and short indicators at no charge. So all you have to do is sign up for the basic service, and you will get these indicators for free. And I will also send alerts about various stocks, like you know, recently broken out stocks. For example, here's Qualcomm. I personally have several positions. Here's one that I'm kind of proud of. Here's Overstock. I entered back September and it just went straight higher. I already took profits, so I'm basically just riding this thing higher. Very crazy volatile stock. Have Gap GPS. So far I have a small profit, but I think this is a bullish chart also. Yeah, so do sign up at MasterCharts Trading. Again, if you have any questions, send them in. And thanks for watching, and have another great trading week. Bye-bye.